If you came up with a scheme like this in your business, it'd be called fraud. But if the government does it, then it's whatever bullshit title they give their version of a Ponzi scheme. So you got a lot of things happening. You got this is not even controversial what I'm saying. These are just like facts. It's not even, there's nothing I'm saying that's controversial. That I hope you take the time to do the research on it. Regarding the banks, I'm curious for other people's opinions on this without being too unruly about it, but there's a shell game being played at the moment where the Federal Reserve and the media wants to say, we're raising interest rates to beat down inflation, and you could call that the lingo that some of them use would be quantitative tightening. You hear about QE, quantitative easing. So you have quantitative tightening is the opposite. We're raising interest rates. We're removing cash from the system that through issuing bonds. We're removing cash from the system, making the cash a bit more scarce, a bit more precious, because you're not getting 0% interest rates anymore. Now you can give money to the Treasury at higher and get a higher rate of return, or even certificates of deposit have a higher rate of return for people that have no creativity to do anything better with their money. So that creates a situation where okay, we're trying to combat inflation, but at the same time we spend over $100 billion to donate to Ukraine. Now we could argue about that. Some people there is an argument that proxy wars are useful and that saves American lives and whatever else. But I mean the U.S. government is meddled. Most of the problems the U.S. government has and most of the enemies the U.S. has around the world are from decades and decades of meddling in other countries' business. Since for all of time, I suppose, since the country was developed, but certainly aggressively, from the 1960s onward. I think that would be a fair thing to say that through the 60s and 70s, we got the Vietnam War, and we've just carried on since then with endless meddling and George Bush and his righteousness. George Bush Sr. and Jr. and all the other shenanigans that have happened. The Patriot Act took a lot of your rights away already that some of you are too young to remember, that you had a lot more freedom. It used to be the government couldn't spy on you. Now that's normal course of business for them. The government wasn't supposed to spy on its own citizens. Now they do it all the time. And they have the big tech companies help them, and nobody's going to do anything about it. So before the Patriot Act, and that wasn't that way. So only the past 20 years they've been able to do things like this. And they do it more and more aggressively and with no recourse to do anything about it. So go back to banks. So on one hand, we're saying quantitative tightening, beat down inflation. Well, they've been lying about the inflation rate for at least since the 70s. How long do you think?
Yeah, it's about the
Early 80s? The real inflation numbers are at least twice what they claim to be. So if you look at how consumer price index has been tinkered with over the years, they keep changing the basket of goods, always in a way that's favorable to say that inflation is less than it is. This is not random chance that they change this. They instead of using arithmetic means, you use geometric means, or vice versa. You change the. I thought that was true. Yeah. Then they play games with changing the basket of goods. They discount the advances of technology, and maybe there's 5 more things that he can add, but that's just off the top of my head, impromptu here. And the consumer price index is not to be trusted. So when the government tells you that there's only 6.5% inflation, well, that means 14 or so percent. It's not 6.5%. That means 14 or 15% in real life. Now, the new game, the shell game that I spoke of minutes ago, the new game that they're playing is, well, now because they keep raising the the interest rates, and now you have bank failures because the banks aren't competitive, right? So the banks can't give you the same money because if they, some of them bought mortgage-backed securities. If that term sounds familiar, that's because that's what caused a lot of the 2008 crisis. So a lot of the banks bought, MBS, mortgage-backed securities, as an investment, and SVB, Silicon Valley Bank, that was the first bank in the recent collapses, true collapse. They invested something like $80 billion at an average rate of return of 1.56%. 1.56%. All right, and now the interest rates now that was, I believe, late 2021, but now the interest rates have gone up significantly. And now when they have to go sell that in the market, they have to sell it at a discount because a person could get a higher rate elsewhere. So the way that those sorts of securities or a bond would work, this is not a bond, but the way bonds and those type of securities would work, it has to be sold at a discount from the stated rate to make it competitive. So you have to sell it for a percentage of par value, because nobody would pay par value for it in an environment where the interest rates have changed. So now they have, because they had to mark to market some of their things, now they don't have the funding that they're supposed to have for the liabilities. Their assets no longer match their liabilities, and you see what happened there. And then you had another bank where they had a lot of Bitcoin problems or cryptocurrency related loans for some reason in New York, Signature Bank. And by the way, for those that don't know, let's go back to SVB for a minute. SVB is $209 billion failure, $209 billion with a B. The largest bank failure in US history is Washington Mutual, which was 2008. That was a little over 300 billion, slightly over 300 billion. The number 2 bank failure behind Washington Mutual until SVB was only about 40 or 42 billion. 40 or 42 billion. So this is the new number 2 is 209 billion. So it's 5x bigger than the previous number 2 spot. A couple weeks later, the Signature Bank thing, I think that's 180 billion. And bear in mind, I wasn't prepared to give a presentation about this. These are just numbers in my head because I'm a weird dork that remembers numbers. So Signature Bank, 180 billion. And so very quickly, number 2 got kicked down to number 4 very quickly. And now the Fed has to step in, and did, on Monday, really on Sunday. They announced this on Sunday. The Fed has to come in with the Treasury and say, this is not a bailout. They said, this is not a bailout, because that word is now toxic from 2008. Voters remember that word. They don't want to see a bank bailout. So voters remember that word, and 2023 is an election year. So this is not a bailout, but we're going to give loans. They're going to give loans to the banks at par value for assets that they have on their books that are no longer worth par value. And you could have those loans for up to 12 months. So that's like saying, that would be like us saying, how many people own here, a house, or some stocks, or a car, or anything else of value, okay? The car is beautiful. Is your car worth as much as you paid for it?
No.
So wouldn't it be great if you could get a loan for your car for the price that you paid for it, even now that it's depreciated? Or wouldn't it be great if you sold us, the stocks that you own, if market value is higher, you could sell them for the current market value, or you could sell them back for par value, even though they've gone down several percent or many percent. The banks can do that now, but it's not a bailout. It's not a bailout. So at the same time, that has an effect of quantitative easing in the banking system. You have the effect of creating more liquidity on one side, and then you're playing fucking hide the weenie over here, and then on the other side they're saying, we're raising interest rates to beat down inflation and shore up the strength of the dollar, maintain the integrity of the dollar and the economy, and so on, so on. So they're playing both sides of this. That And it's almost a joke that I'm curious to see. It'd be hilarious if there weren't actual consequences for our futures. This whole thing would be hilarious. But I'm curious to see what happens next regarding interest rates. Can they continue the farce of raising interest rates, which, by the way, the more they raise the interest rates, the less competitive the banks are. And you'll have more bank failures. You'll have more need for those loans. So the more they raise the interest rates, the less competitive the banks are, and the more banks are going to need those fake par value loans that we could never get. If you came up with a scheme like this in your business, it'd be called fraud. But if the government does it, then it's whatever bullshit title they give their version of a Ponzi scheme. So you got a lot of things happening. You got this is not even controversial what I'm saying. These are just like facts. It's not even, there's nothing I'm saying that's controversial that, I hope you take the time to do the research on it. And so you have inflation is more than twice what they say it is. They claim that we're going to raise rates to beat down inflation, which is a total joke. That they're doing that as an optics game, but it's a total joke. They like low inflation, and they like low interest rates. They don't mind the high inflation, so they're not going to make a serious effort at that. But they need to create some optics that they're doing so, at least enough that a stupid person can't tell the difference. And then at the same time, you create a new quantitative easing program on the back end that's undoing the quantitative tightening. Well, we also print endless billions of dollars, and send it for foreign aid or supporting other countries, whatever you want to call that. So you guys mostly follow that? And I'm going to get Gerard to talk about the inflation in more detail, but pick at me a little bit about this. If any of that seems fuzzy, or if you think I'm missing something, poke at me a bit.
Yeah, I was just going to add, actually, if you look at the Fed's balance sheet, I think this was as of like 2 days ago, they've undone all of the QE from, all the quantitative tightening from April of last year. It's like been completely undone.
Funny enough, I'm the type of nerd that looks at exactly those type of things. And if you look at the numbers, I literally looked at this today. If you look at the numbers, there's up to 2019, 2020, the Federal Reserve balance sheet, slightly before, say 2016, 17, it was floating around from there, from the 2009 recession till 2016, thereabouts, 17, it was floating around $4.5 trillion. It used to be $1 trillion back in the day. Then they quadrupled that. So it went up to about $4.5 trillion. And it was floating there for a while. And I think they took it down to about 3 or 3.5 trillion for a brief period that it trickled down to about 3 trillion or 3.5 or so going into 2020. And then it goes from there, and by 2021, it's about 10 trillion. So they about tripled it from 2020 to, in 2 years, in less than 2 years, they about tripled the Federal Reserve balance sheet again. And then to Sahir's point, from, through 2022, they raised rates and raised rates and raised rates. So 2022 till present, they started chipping away at that, and reducing the Federal Reserve balance sheet again for less than $1 trillion, but something close to $1 trillion, I think. And I just glanced at the chart and interpreted it, and they just undone about 700 or 800 billion of that. So maybe 70% or 80% of the progress they made, they just undid that this week. So in 2 days, they just undid 70 or 80% of the progress that was made in the past year plus. So yeah, look at these charts for yourself. It's not hard to find that one. It's a Federal Reserve balance sheet on FRED, F-R-E-D. You'll find all sorts of information on that website. It's extraordinary what's happening, and nobody understands it. The population is utterly oblivious, utterly oblivious. Some people in this room don't understand it, which is not to make fun of you. That'd be normal. Like, you got to be a certain type of weirdo to look into these type of things or think about it. So it'd be normal if you don't understand some of this, and ask questions. If that's you, then that's fine, but ask questions and let me help fill in those blanks so it's clear. So, do you guys follow the general structure that I described in the last few minutes? Who didn't understand? Somebody didn't understand that because that's pretty damn complex. So let's talk it through a little bit. What did you get and what seems fuzzy?
Some people are confused. They say, Derek, what is the 10 Commandments of wealth? Not the 10 maybes of wealth. It's the 10 core things that you're going to need to know about in detail if you'd like to accumulate significant wealth in your lifetime. Click this link up here to find more information of exactly what is the 10 Commandments of wealth, how is the program structured, what's inside of it, how are you going to benefit from it. If you're doing well already and you'd like to do better, click that link and find out more. There's over 100 hours of content in this program. I've interviewed dozens of world champions that shared what it took for them to win, to be the top Hall of Fame athletes in their respective areas. And I brought a lot of other superstars in there from business, from legal, people that are real world entrepreneurs that made serious money, as I have myself. We all share with you what are the foundations you're going to need to know if you want to be successful yourself. Be a chooser, not a loser. Click that link, find out more. I'll see you inside.